Good morning. It's July the 7th, 2016, and time to kick off another trading day. Today's trading is likely to be dominated by tomorrow's non-farm payroll numbers. And we're looking for job growth of 180. This morning we'll have ADP looking for 150. Both these numbers could come in lower than forecast. They certainly did last month. We can also get game playing where this month this number comes in and matches it, and they adjust last month's numbers higher. I mean, it's just hard to say anymore. It's really difficult to guess what's going to come out of our agencies. They cook the books. So ADP will be the first news focus. Jobless claims will probably be lost in the ADP numbers and in the direction of the Emini. Is going to be the number 2. That will come after that ADP number. So given tomorrow's non-farm payroll numbers, I'm going to play for a trading range today. You can see that we should start finding pretty good support in the 16 area, picking up this break right here. It's 13 to 17, 12 to 16 is probably reasonable support. So we're going to put our first buy at 13 to 17. And our second buy at 5 to 9. On the sell side, 23.27. And then 31 to 03 for sell 2. And my guess is it's down to what the E-mini is going to do. Looking at the 30-year, our first resistance area is going to be 8 to 12. So 15 to 19, sell 1. Then 27 to 31, sell 2. On the buy side, the buck to 28, number 1. 21.25, buy 1. 9 to 13, buy 2. And again, I think it gets down to what the E-mini does. If the E-mini just takes off and blows and goes, to the upside, treasuries will sell. But I don't think the E-mini is going to do that. I think the trading range will hold for it. Gold was on hold overnight. Probably will be on hold today, awaiting tomorrow's numbers. Looks like we've got support at 55 to 60, and we've got resistance at 70 to 75. 69, 71, sell 1. 74, 76, sell 2. On the buy side, 60, 62, buy 1, 55, 57, buy 2. Euro was up a little bit last night. Not much. The economic numbers out of Europe this morning were pretty bad. German industrial production down 1.5%. Looking for a small build. The UK's industrial production was off 0.5%. It was better than forecast. It was forecast to be down 1.2%. Came in a little bit better, but it's still a negative number. So we're not having strong boom economic times on the continent, and they really do want the euro lower to get some help exporting outside of the European Union. Top of value is 25, so 25 to 35, sell 1. 50 to 60, sell 2. On the buy side, 1075, buy 1. 1050, buy 2. Okay, last night's API numbers drew over 6 million barrels for crude oil. It rallied off of that news last night, and we find ourselves in the situation. The EIA numbers, they're looking for a draw of 2 million barrels today, which would be positive. Resistance is at 48. So sell 1 is 48, 48 and a quarter. And again, a news day, 50 to 75 for sell 2. Yeah, the APIs give us some pretty good support. So 47 and a quarter, 47.50 buy 1, 46.50, 46.75 buy 2. Longer term, I think crude is headed a bit lower, but again, we've lost 1 million barrels of production per day. It is sitting there. It can be brought back online quickly. Horizontal wells are much easier to open back up and produce than vertical wells. You can lose an oil well, a vertical oil well, when you shut them in. Natural gas doesn't matter because of the pressure of the structure. So the horizontal well production capability is there. You don't lose that when you shut them in. And that hangs over the market, so that'll probably cap rallies. But supposedly the world imbalance has been about 1 million barrels per day, and it's come out of American oil producers' hide, collectively out of their hides. And the imbalance around the globe supposedly has been cured, if you believe that, yeah, various economic forecasters' numbers. Now, down to the Emini. Let's take a look at the big picture stuff on the Emini, if I can find it right here. There it is. Okay, we're at the top of the trading range, and things look awfully bright when you get to the top of the trading range. And we had a nice rally yesterday. Market is pointed up. We have a seller at 2100. We got a buyer at 2000. And we're at the top of the trading range. So my guess is the trading range is going to hold. We're going to have a hard time at 2100. Looking at the F1 screen, you can see that we found sellers definitely above, say, 2099. And you can just look right across the screen and see where the seller is. So the seller is at 2100, and we're at 2090, 2091 right now. So my guess is that the trading range does hold, and our first sell is going to be 94 to 99, then 4 to 9 for sell 2. I think we're headed a little bit lower. I think we have this attractor draw at 88, so put an 85, 87 out there with a question mark at 90. And then 80 to 82 for buy 2. And my guess is we'll see a trading range. ADP 150. That number could come in lower than forecast. Jobless claims 269. I don't want to say who cares, but it'll be lost in the ADP number. And then crude inventories at I think it was minus 2.1, which would be supportive for crude, which could take equity prices up too. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. Be back with you in a bit.